Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Well, we love talking with you about all things related to the ag commodity markets, and this Friday is no different. I want to welcome aboard Eric Relph of Commstock Investments, and we'll take a look at the market activity for this past week, the first full trading week in December. And now that we have the wraps on it here, Eric, I want to get your thoughts on what we saw take place this week, if anything, and if it means much as we go into what I call the holiday doldrums now.
Kind of feels like we went into the holiday doldrums already with few exceptions, but there was, I guess there's enough storyline out there that we were seeing some market reaction to it, starting first with Russia. Private estimates looking for, calling it the worst conditions on record for this time of year. So we are expecting some kind of market reaction out of that. We did see a little bit of that this week after making new contract lows in many cases, new lows for the moves almost across the board. Then those headlines start coming out and we rebound from the lows, finish the days a little higher, get a little follow through the next day. Today, not as pretty, but at least we didn't give it up either. So a little bit of something to talk about on the wheat front there. The bigger deals right now, Brazil, all things look pretty good currently. There are enough forecasts looking for some dry and maybe a little hotter on the horizon to the point where it could start to be traded a little bit more. Right now, that's still kind of in the background. What is in the foreground, though, is the 45Z guidance. And are we going to get some biofuel credits and some information that's really going to boost the U.S. corn market along with the soybean oil, thereby the soybeans as well. So there's a lot of stuff going on, and I think it's starting to catch some attention, especially now that we're 40 days away or so, 45 days away from the Trump presidency. The rhetoric around the 45Z is it going to happen during the Biden administration, or is it going to be after Trump takes office? So a little bit of hesitance there, and we've actually seen mixed reports. Reuters came out one morning this week with it's not going to happen during the Biden administration. And then within a couple of hours, Bloomberg reports that a source within the Treasury Department says it is going to happen within the Biden presidency. So I'm not sure I can hang my hat on anything yet, but talking to some people secondhand through the Carbon Alliance, they're confident that it is going to happen before Biden is out of office.
Yeah, I didn't know if there would be that much appetite in the whole of Congress, to get something done on that.
Mhm.
I thought maybe they would have a lot more stuff to worry about and that maybe that would get put on the back burner. I don't know. What do you think?
Well, I think between your national and state organizations that are pushing for this on both the corn and soybean front for obvious reasons, how much pushback are they getting from the big oil? I don't know, because they're actually not so much opposed to this, because then they can buy in and start purchasing carbon credits and lower their carbon footprint along the way as well, which then enables them to receive government benefits that they wouldn't otherwise be eligible for. So where we would expect to see big pushback from big oil, maybe we won't see it. They might actually get on board with helping push this thing across the finish line. And so far, that's kind of been the rhetoric I've been hearing.
So technically, did we accomplish anything this week on any of the grains?
Well, I think so. And I'm going to pull this up. Pardon my mess here. I was looking at a few other things here. From a technical standpoint, I think there was a couple notable things. Short-term resistance in March corn was kind of taken out. And by short-term, I mean very short-term. You could say that we had a wedge pattern we were grinding into here, starting with this trend line support. Yesterday kind of tested both ends of that, especially the support side. And we did rebound, finish higher on the day, about a nickel higher yesterday. And so coming into today, we were flirting with that and then took it out here this morning. And so by the time we close, we're well above that, another nickel higher in the March contract at 440. So short-term topside breakout, longer term, we're still within that wedge, but the upper end for sure. A little bit of follow through would give us a little bit better longer term outlook, but the weekly close here was really nice. Pull up that weekly chart and you can see that's the highest close we've had in 4 weeks since back here on the first week of November. So definitely something positive there in the corn. In the case of the wheat, and I alluded to it earlier, we did make new contract lows in a couple of the key contracts or a couple of days ago. But you can see, get off the weekly into March, Chicago, we make a new contract low on Wednesday. and then actually finish higher for the day. So we uncovered enough buying there that it made you feel like by the close, even though it was just slightly higher, it made you feel like, okay, we did something positive. Now, can we get any follow through? Yesterday, we did see follow through. Today, we finished a penny lower, not enough to move the needle, but this was a nice little finish to the week from a technical standpoint, and again, a higher weekly close. So flipping back over to the weekly chart. Nice to see that little turnaround off the low and finishing higher for the week. So something to hang our hat on there. Soybean oil was pretty remarkable over the last couple of days. And then today, especially, took out a bunch of moving average resistance and got the highest close that we've seen in 2 weeks. So that all relative to the optimism surrounding the biofuels, in my opinion, that's the main driver there. In addition to the fact that we're seeing all the global vegetable oil markets react to that, crude palm oil along with canola, both looking really nice here over the last week and a half or so.
Has the volume held okay in the grain trade, or has it slacked off here in December? And sometimes that can mean maybe more exaggerated moves.
Yeah, actually, the major markets have held pretty well. You're starting to see some deferred contract volume slippage, which you kind of expect some of that. But up front, we've held in pretty good. It has been slightly lower than what we would normally expect to see. Like, for example, today on a typical Friday in November, you would see higher volume than what we saw today. But that's typical of this time of year. You just have a lot of people that aren't active, doing other things.
Now, we did have some numbers that came out from Canada too, right? As far as maybe employment numbers. And I know they had some wheat production updates, I believe, recently too, right?
Yeah, actually, what we had been hearing all along was that they recovered from their drought and everything was going to be so much better. And what we saw ultimately was a shift in the oat market, which a lot of their crop is canola, oats, and spring wheat. In the midst of the drought talk, you started to see those markets kind of starting to rise and seeing maybe a little bit more reaction. You see an oat market that's pushing near $5. Something's going on, and it's usually relative to Canada. But it looked like what we saw was they actually pulled a little bit of acreage away from wheat and shifted it to oats in some of those marginal regions where they do have the pliability to shift midstream. And so their actual overall production is looking like it's going to be slightly less, while we've got Argentina kind of offsetting some of that. So the wheat market is really struggling to find which direction it wants to go, because Argentina is set to receive a lot of moisture, and they've been receiving some already, with the forecast looking really promising. So not to switch gears too hard on you, but it's like every supportive storyline you hear from one place gets offset by a bearish one from another. And the wheat in particular just gets caught in a whipsaw.
Well, I'm going to do a transition or a segue, if you will, into livestock at this point. And I noticed where there has been some talk about the growth of the winter wheat crop here recently with some moisture in the southern plains.
Mhm.
And that can maybe affect how many cattle are put out there on pasture and what kind of gains you can expect to get. See how I did that there? So let's talk about cattle here. What is the net result from them being out on the wheat grazing this year? They haven't been able to do that for quite a few years.
Well, in certain places, they always do it regardless, because they just don't care about harvesting the grain so much. So they'll just graze it off until it's dirt and then start over with chickens or something. What we saw here was late October, you start getting some rains, and it lasts all the way into early November. Normally, you would expect to see the wheat stocked by mid-November. The rains were late in coming. The wheat was in the ground. Of course, the plant in the dust, your bins will bust, that old adage. Um, and and so the wheat starts coming, and when it finally came on with a little bit of heat units, it came on in a big way. And I actually spent some time down in southeast Kansas and made my way west as far as I could handle time wise, and saw what would normally be, I mean, you'd expect to see 4 or 5 inch wheat, and it was near a foot tall. And I mean, just unbelievable. And so, I mean, sagging at the top, draping over, but cattle out all over the place. And so I understood some of the euphoria that was going on around that. But what happened in the cattle market was, so that happens. Now we've got this wheat pasture that we can either rent, or we have the wheat, we can turn the cattle out, so what's going to be the best alternative? When you look at the market, I think the market would tell you, go ahead and put that wheat into that animal and then walk the dollars to town rather than trucking it, because the wheat market is pretty soft compared to what we've seen for the last several years. But that stocker demand for the 4 and 5 weight stuff was just unbelievable, and it just kept bleeding over into other weight classes. So normally you'd see 4 and 5 weights go crazy when there's wheat to be had, and then maybe it starts to wane off in the 6s and 7s. Now they're stocking all the way up to 8s, from what I'm hearing. Obviously, you lose a lot of efficiency if you're running an 8 weight on wheat versus a 4 weight cow or calf. And so what is that going to mean in the end? Well, what it means so far is that everybody's paying too much money for these feeder cattle, and the market's just been on fire. I'm hearing about 4 and 5 weight calves bringing as much as yearling steers. You put a 4 weight calf out on wheat and you might get a couple pounds a day at 80 cents a day is what I'm hearing this year. Normally it'd be about 60 cents, but obviously that market is really hot, and so they're able to get a little more out of that wheat. But if you can get a couple pounds on a 4 weight animal at 80 cents a day, that's pretty cheap cost of gains. And then once they come off that wheat, they'll just explode when you put them on commercial feed. So there's a whole lot of positive in the whole scenario. So they're willing to pay up for them. But if you're putting 8 weight animals out there on that wheat, this becomes a very different deal, because you're going to be lucky if you can get a pound a day just due to lost efficiency. And those animals are just going to tear through that field way faster. So very, very different scenarios here. And really it's just energized the entire market nationwide. It's unbelievable what's been going on. Record prices everywhere.
Technically, the cattle markets have been flying pretty high, and they're still at very lofty levels. And you and I had spoken earlier this week about that news story that came from the South, talking about Mexican screwworm and how that could be impacting the U.S. cattle markets here. So what's the latest in that news front, and what's the correlation there right now?
Yeah, well, pulling up the correlation as we speak here, and this is so the screwworm situation was that screwworm is prevalent in Central America. It's the larvae from a specific fly, and that is usually contained in Central America. You don't see it as far north as Mexico. However, recently they found a case in Mexico, and then they immediately shut down imports to the U.S. of cattle from Mexico. Well, we import about 100,000 head a month from Mexico into the U.S., fed and feeder cattle combined. Most of that is feeder cattle coming into Texas. But what they found out late last week was that it was one case isolated to the southern tip of Mexico, and maybe they would have a resolution. They were still following traceability and making sure that they were going to be okay, but maybe we would have a resolution sooner than later, where everyone thought it might take 3 or 4 months to get it sorted out. Well, now you're talking upwards of 500,000 head of cattle. Now they're saying, well, it's down there. It looks like an isolated incident. So then come Monday, you're trading higher early because of the news the prior week. And then all of a sudden the reports are coming out. Okay, it's only one incident. It's a one-off deal. Maybe they keep it contained. Then you have a reversal lower and finish in the lower half of the day's range, and actually posted a key reversal in several contracts of both live and feeder cattle. Next day, you take most of that loss back and then trailed off to finish the week. So technically not a good look here, but fundamentally not a lot has changed. And we do have a cattle on feed report coming up 2 weeks from today that is widely expected to be quite supportive. November was the month when we were stocking all these pastures that we're talking about, whether wheat or native grass. But whatever the case, there's a lot of forage out there, alternatives to commercial feed, and they were all being stocked during the month of November while the feeder cattle market was going ballistic. So lower placement numbers should have mid-level marketings. I don't think that number will be too surprising, but this is something that looking forward could rip this market right back higher, go make another new high before it's all said and done. But so many dollars at risk here. We just feel like you've got to be putting some kind of protection on at least some of this crop, because if this does continue and this technical outlook draws algorithmic attention and continues to sell off when the funds are near record long, it could get really ugly.
Well, now I want to bring this full circle here in this discussion. Right when we started this recording, I know you were looking at some cash basis prices for corn prices all around the country, including the Midwest, the plains, the southern plains. And it was amazing the disparity between one part of the country and the other. And it has to have a lot to do with the demand from cattle, doesn't it?
Absolutely. Yeah, that's one of the major driving forces. And what I was looking at actually as we got ready to get on here was, well, I'll start at this end. I would
Okay.
normally start the other way, but I'm sitting here in Northwest Iowa, so that's where it takes me first. So when I look at Valero ethanol plant in Hartley, Iowa, they're 3 cents over, and that's their posted basis. But I do know firsthand that they're offering as much as 20 over. So all things being equal, we have to take these posted prices to an extent with a grain of salt. But you can see the variability within a fairly short distance. There could be 10 cents variance in 100 miles, no big deal. You would kind of expect to see some of that. But then I was looking down because I'm from Southwest Kansas. I always kind of go there and see how things compare. And while I'm looking here in Finney County, 470 posted, which means the feedlots are probably given 5 to 5.25, somewhere in that range. I see down here in Optima, Oklahoma at Seaboard, they are posting 533, which is 93 over the March board. And that, what are they going to be actually paying cash? It could be as much as 550 or more. We don't know, unless we make a call and have some grain to offer them. But it's amazing because you can go over to Southeast Kansas. The posted bids are $4. In some cases, less than $4. So it's really revealing, and you can see how they're trying to siphon the grain out to the areas that need it most when you start looking at those breakdowns. There's Seaboard in Hugoton, Kansas, that posted at 85 over, probably would pay $1 over. So really interesting stuff when you start looking around the country at what the cash market is doing and kind of what those variabilities look like. It just, to me, caught my attention and tells me that maybe the move that we've seen in corn of late is warranted as these end users are starving for supply.
It seems like a lot more of the corn is going to have wheels under it this winter than normally would be the case in an average year.
It kind of feels that way, especially when you look at specific production regions that are heavy cattle feeding regions. I was down in Northwest and West Central Kansas in August, seeing the tail end of that crop, and it was quite depressing when you're talking about the corn. And they hadn't even got to the worst of it yet. Luckily, I say luckily, at least it was at the tail end for the corn. But I was seeing beans there that looked really promising because they had started getting rain. It was too late for the corn, but it looked like it was okay. It was on time for the beans, but then it just shut off. So the beans looked really good when they were a foot, 15, 18 inches tall. But by the time they got mature, they didn't produce either. So they kind of got double whammied with the drought situation this year at just at the wrong times.
Just to tie things up here and wrap up this episode, any thoughts on the hog market?
Well, relatively weak compared to what we've been seeing in the hogs, which that has been an extremely strong market. We didn't see a strong finish this week. We saw really light numbers of cash trade. And although higher for the day, it wasn't a real promising week. It was just flat. You can look across 5 sessions there and you're just in a straight line, basically. You had highs and lows, but for the most part, really didn't move the needle a whole lot. This market has been extraordinarily strong. And when I talk to growers and feeders across the country, I hear very supportive stories, and I'm hoping that it's not just hopes and prayers. But I hate to get too bullish on disease news, but I'm starting to hear a lot more stories about PRRS and limited supplies for next year. And I've also heard a lot of stories about packers calling feeders directly looking for supply currently. So I'm a little hesitant to not hedge off 102 summer hogs next year. But by the same token, I'm hearing some pretty supportive stuff.
Well, we're coming toward the end of the year. Anytime we get into the holiday season, a lot of times the trading volumes decline and things get a little wacky, as you get toward the end of the year. But I
Yep.
just wondered strategically, is there anything our producers should be taking a look at in order to just kind of safeguard themselves from maybe having the market fall out of bed on them when it gets real busy? Or
Yeah, there's several things to think about. I mean, as the volumes decline, you also have to consider profit taking for year end. Where is the profit at? Who holds the profit? And are they going to be willing takers before the year end? And in the case of both cattle and hogs, you have the funds with near record long positions or record long positions, depending on which one you're looking at. And they're sitting on a pretty nice profit with those long positions. And we're coming up on the end of the year. So I think that some protection there is warranted from a decline just for the sake of the next 30 days, until they can start repositioning in the new year. That's a potential, and that's something to think about. And a lot of that will occur earlier than you might expect because they're not going to be working much from Christmas to New Year's. And so we only have from the 23rd, basically. Once you pass December 23rd, there's really not much goes on. Now, you can see some market swings that are unwarranted during that time because of such light volume. But the reality is from a trending standpoint, you have to look at the fund positioning. We need to pay attention to those reports on Friday. We need to guard ourselves against some alternative swings from their standpoint to end the year here, because they will wipe the slate clean in some cases.
All right. Well, Eric, it's been great to visit with you again. Thanks for recapping the week for us here.
Yep.
Wish you and yours all the best for a great weekend out here. So,
Yeah.
and in fact, I want to remind everybody at this point to make sure you like these videos, subscribe to the videos by clicking the bell icon down below, and share these videos with others as well as we continue to grow our audience. Thanks to your help. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next week right here on the Comstock channel.